Capital gains tax explained. Real estate tips you need to know. Have you sold your house? Great. But Uncle Sam's gonna want his cut. All right, let's talk about capital gains tax and how to keep more of your profit in your pocket. If you're selling real estate, this is a must watch. All right, hey there, I am Lori Allen Macaluso, the founder of the Luxury Home Group right here in Park City, Utah. And today we're breaking down the capital gains tax, what it is, how it works in real estate, and most importantly, how to minimize it. All right, don't forget to like, subscribe, and tap that bell for more luxury real estate insights and money saving strategies. All right, what are capital gains? Capital gains happen when you sell something for more than you bought it for. In real estate, if you bought a home for $500,000, you sold it for $800,000, your gain is $300,000. But the IRS does not let that slide. You might owe capital gains on that $300,000. All right, short-term versus long-term. Here's where it gets tricky. Capital gains are taxed differently depending on how long you've owned the property. Short-term gains, you've owned the property for less than a year, taxed as ordinary income, up to 37% depending on your tax bracket. Long-term gains, owned for over a year, taxed at 0, 15%, or 20% depending on the income. That is a huge difference, so timing on your sale can save you thousands. Primary residence exclusion, this is good news. If your home was your primary residence for the last 2 out of 5 years, individuals can exclude $250,000 in gains. Married couples can exclude $500,000, which means you could walk away with a $500,000 profit, tax-free, if you meet the IRS rules. 1031 exchange. Are you selling an investment property? A 1031 exchange could be your best friend. It lets you defer capital gains tax by rolling your profit into another like-kind investment property. There are strict timelines, however. You have to identify a property within 45 days and 180 days to your close of escrow. How to reduce capital gains? You want to reduce your capital gains. Here's a few smart strategies. Hold the property for over a year. Live in the home for 2 or more years to qualify for the exemption. Use a 1031 exchange. Track all improvements because they can increase your cost basis. All right, and finally, talk to a CPA before you sell. Capital gains tax can feel confusing, but with the right strategy, you can protect your profits and make smarter real estate moves. All right, drop your questions below or message me if you are planning a sale of your property and want to minimize your tax bill. All right, like, subscribe, share this video with anyone who is thinking of selling their home or investment property. I am Lori Allen Macaluso, and I help buyers and sellers across the country build wealth through real estate, one smart decision at a time.